prop firm payout splits, that's what I want to address in this video, because it is a very, very fair critique to have thrown at you from the outside. And I get it, and I want to address it because my belief right now at this moment in my trading journey is that within the category of day trading, the best way, and I'm defining best as most efficient, the most efficient way to go about day trading is do day trade futures through a prop firm. But there is, like I said, the critique out there. Yeah, Clay, this doesn't make a lot of sense because it would be more efficient is if, you get to keep all the gains that you make. So if I use my own funds, then I get to keep 100% of my profit. In the prop firm world, Clay, what you're advocating for, you don't get to keep all of your gains because, well, there are these things called the profit split. So I don't see how that could be worth it. But I'm here right now to tell you, yes, it is worth it. But I want to also just let you know that I am going to use some of my results, show you some actual numbers, so I can prove out that, in my opinion, it is certainly more than worth it to still use a prop firm and not actually get to keep 100% of your gains. Because at the end of the day, there's a certain calculation out there that I think does a good job of bringing to light just how ideal using a prop firm is within your day trading. So let's just first start with a little bit of context here so I can build some numbers and you can see this for yourself. So this is not in theory, these are some of my results, and I'm not going to go too far down the rabbit hole, but the prop firm that I use, and I'll put a link down below in the description area, you can check them out if you want to use them. But the way that it works is at this point right here, you can see that the amount available for withdrawal, that means the amount that I could get in a payout, right? I could request that amount of money on this particular day, which was recent as of the recording of this video, but was $1,020. So that is how much I had made. That's how much I was eligible to have paid out to me. Now, there is a bit of clarification here because this is happening, again, with this prop firm in a pro account. And part of the pro account, you can see right here, when it comes to the profit split, I get to keep 80% of it. So right there, fair critique. See, Clay, how can that be efficient? You made $1,020. Now you're telling me you only get to keep 80% of it? And that is what I'm saying. So let's just go through the calculation here so you can see the numbers and we'll see them how they play out. So yes, we'll do this just so you can see right there. So I made the 1,020, but I only get to keep 80% of it. So let's multiply that by 0.8. So that means I get to keep $816 out of the 1,020 that I made. Which again, okay, that doesn't seem too efficient, Clay. Had you used your own funds, you would have been able to keep all 1,020. Fine, fair enough. But let's consider some other numbers and some other, just kind of circumstances of this situation. So let's now consider, and I'm going to turn this into more of a hypothetical right now, just so I can try to make the numbers a little bit more, try to tilt them almost against me to show that, yeah, it's still actually very impressive. But so let's go back to here and say, okay, well, Clay, that was on, and the results you're seeing was on a 50K account, meaning that you have 50,000 in purchasing power. So if this were you could go and do this and you'd have to spend $102. So money out of your pocket, capital required for you. So you can look at this kind of however you want, the risk required, but capital out of your pocket was $102. Now, the way it works is that you first do have to prove yourself. So there's like a little test phase, and then if you prove yourself, pass the test, you move into that pro account, which is what I was just showing you. And that's where you get to start to keep the money. But let's just say for whatever reason, so we'll have to remember that 816, but so let's say you go and you buy that first account for 102. So 102, but then you go out there and I don't know, you do something stupid, your revenge trade, but you end up losing the account. So you fail the account, and when you fail, they'll take the account away from you. Meaning, okay, you just lost $102 because that's what you paid for the account, and now the account has been taken from you. But you can try again. So let's say you go and you try again. So well, we got to add in 102 here. So now you're at 204 invested, 204 capital required, 204 risk. However, whatever verbiage you want to use in your mind, that's what we're looking at, because that's the money that's out of your pocket right now that's been put into this. So $204. But let's just say once again, I don't know, maybe Trump tweets something, but I don't know, you lose the account once again. So all right, well, I want to try again. So you go and you buy another account, so let's plus 102. And then at that point, let's say you have a situation where you go on a run, you pass, you get to the pro account, and then you're facing that exact same number that I did where, all right, now I've made $1,020. And of course, you only get to keep 80% of it, so that $816. So here is a number that I think does a very, very good job. And I'll put the link down below so you can go fool around with it if you want, because I'm not, don't take my word for it. You can go crunch these numbers on your own. But a very important calculation out there. I'm not saying it's the only one, but I think it's a good universal one as at least a good starting point is the ROI calculation, return on investment. Meaning what sort of percentage are you getting in terms of the capital that was required? So in this hypothetical right now, we're saying that in all, $306 of capital was required, right? Because you had this and you had to get 3 of those accounts before you could pass. So 102 times 3, that was your capital required. That was your risk, however you want to look at it, but that was your investment. $306 into this prop firm to get those accounts, to which you then got $816. Just to reiterate, yeah, you had 1,020, but you were only able to keep 80% of that because of the profit split. Well, now let's go take a look at the actual math and how that works. So right here we have, and like I said, I'll put this link down below if you want to go to the site or just, run a Google search for an ROI calculator. But in this situation, what did I say? Well, we had 306 invested, right? That's how much it cost you in total to get those 3 accounts. Eventually, though, you did go and you're able to get $816. So let's calculate that out. And you can see right there, this was a return ROI of 100, and let's just call it 67%. That's a really good return on investment. And the other thing here is that I was just including the 1 day, but from that account that I showed you earlier, I've had other payouts from that. So in all actuality, this 816 is a larger account, or a larger amount, excuse me. So these numbers here, I'm being just very conservative. Now, this is a crazy number. In fact, if you were to go out there and, tell a hedge fund owner, hey, I can get annualized 48% a year. Like, hedge fund owners would sell their grandmas into who knows what to get those sorts of returns. That is an insane return. This right here, the ROI, 167%, insane return. And I want to emphasize, I'm trying to be conservative because this number in my situation and potentially in your situation could be so much higher than what it is. But my point here is that it's still 167%. Why is that the case? What is driving that number up high so quickly? Because this can all occur within just a couple of weeks. And the reason that's driving this is this number right here, your amount invested, because you have such little capital on the line. So if you do use your own funds, and let's just say you have, $5,000, and then you go and make 1,000, sure, you get to keep that 1,000, but when you start to do the calculations here, you're going to see that percentage is way less. Why? Well, because the amount you needed to generate that money is way, way more. You needed $5,000 as an example to generate the $1,000, where I only needed in this situation, or just a hypothetical here, only $306 was needed to generate $816 in profit. So yes, I'm getting less profit. That is true. However, my investment, my capital, my risk was way less than what it would be for you if you're out there needing to fund an account with a couple $1,000, $3,000, $4,000, $5,000. In my hypothetical, the amount required was literally just $306. So $306, the smaller you can keep that number right there, the more powerful the calculation becomes. Now, of course, the higher that number right there, it increases too, but the smaller that is, the better, especially if you just look at it from a risk standpoint. Worst case, if everything would have been kaput, I would have been out $306. But in the real world of using your own funds, if you have a bad day, if you go on tilt, if you just lose your mind, it can be not $306 gone, but maybe $3,006. I mean, anybody that's day traded for a while, and whether that's futures or stocks or options, knows that when you have a bad day of breaking rules, going on tilt or whatever, it can get ugly in a hurry. But that's not the case with the prop firms, because the prop firms are insulating your risk via just making it very cheap to buy those accounts in the first place. So I'm not saying any of this is easy, because trading is not easy. What I am saying is that, in my opinion, I'll take the profit split. I'll let you have 20% if I can generate these sorts of ROI numbers, because as an investor, as somebody that wants to use my capital as wisely as possible, I really like ROI numbers that I'm staring at here. And I just, for the final time, want to reemphasize that in all actuality, this number in the hypothetical could go way higher. Like I said, for me, that was just showing you one day, but I've had other days where I've had payouts too. So this number for me has been, even higher than that. But again, that's all besides the point. I just didn't want this number to, because it would sound a little too scammy, but it's the truth. It can happen. If this number was like 5,000%, But I mean, again, if this number here, all of a sudden, if you go on a run and let's say make $5,000 payouts and you ever only had 306 in, the numbers start to spin out of control in a good way in your favor in a hurry. But like I said, I just wanted to take way more of a conservative approach just to show you that while I do understand the critique, that I'm just going to use my own money because that way I get to keep 100% of the gains. Well, the ROI calculations and just the very nature of the ROI calculation, assumes and would suggest that the lower you can keep that number, the better. And that's the power of prop firms. They allow you to keep this number very, very low. And now that assumes that you know what you're doing. That assumes you're not going to behave like a total degenerate and all that. But again, under that assumption, the prop firm is a great way to try to keep that number right there as low as possible. So I hope that helps. I hope that offers you up of a little bit of a kind of another angle to look at things, because again, if you're watching this video because you have used that as a critique, I get it. That is, now some critiques are absolutely ridiculous. They don't make any sense. But this critique is 100% fair and 100% a good thought on your part of, I want to keep 100% of my gains. Well, maybe consider just looking at things through the ROI lens in terms of the, how much money do I get to keep that I make? Look at it through the ROI vantage point. Look at how much risk you can, or how low you can drive this number right here. And I think that might give you some other things to chew on and maybe consider at least experimenting with within your day trading journey. So I hope this helps. If you enjoyed, make sure to hit that like button. Like I said, if you want to use the prop firm that I'm using that I recommend, I'll put a link down below to that. But I hope this helps. Let me know if you have any questions in the comment section. Take care and thanks for watching.